up. If you have any questions about investing, go ahead and put it in the comments. Hi, Alex. Glad you can hear me. Hi, Rafael. Okay, great. Glad you guys are here. Thank you so much for joining. And I'm going to be watching the comments on another device for you. So if you see me looking to the side, that's why. All right. Well, hey everyone. So for those of you who I haven't had a chance to connect with, welcome to the immigrant finance community. For those who've already been part of it, thank you for being here. Wonderful to connect with you guys again, as always. For new folks, I am a personal finance educator focused on empowering immigrant communities and immigrant families with building wealth. I do this work in immigrant finance with my husband, Mauricio, after going through the experience together when he moved to the US and we had to figure out everything with finances on our own. It was very stressful, very overwhelming. I'm also an immigration lawyer by day at a nonprofit. So I see all the time how important personal finance is for the people that I represent as well. So lots of good stuff to be talking about today. Um, hey, Fernando. Hey, Gabriella. I'm glad you guys are here. A lot of this, for those of you who already have been through immigrant finance school, some of this may be stuff familiar, but I think it'll be helpful to just keep reiterating. Please add into any points you want to share for people to be learning. If you are watching live, please put hashtag live in the comments so that we know who else is here and you guys can connect with each other. If you're watching later on the replay, put hashtag replay. We can go ahead and reach out to you. If you are an alumni of the Immigrant Finance School program, or you are about to join the program, you've already signed up, I want you guys to put hashtag wealth builder because that's what you all are doing. You've committed to really focusing on your financial goals and building wealth and doing that together with this amazing community. So first of all, just to get jumping in, I want to get a sense from those of you who are here live, how comfortable are you with investing? So on a scale of 1 to 5, 1 be the lowest, I have no confidence at all, I have no idea what to do. You can put a 1, and then 5 would be like, I know exactly what to be doing. I have a plan, I have an account open. So go ahead and put in there where you're at, and that will give us a sense too. Even if you're already comfortable, I think the principles we'll be talking about today will be good to hear and a reminder. It's a very important time to be investing and learning about investing. We all know what's been going on with the COVID pandemic and how vulnerable people's jobs are, how the stock market can just completely crash in one day and then go totally up again a month later. There's a lot of volatility going on. And this is a time really where a lot of people I've been communicating with are taking the time to focus on their finances and get them in order while a lot of people are stuck at home. It's a good time to do it and moving forward so that we are in a place where we can be building wealth with our families, and investing is such an important way to do it. There's a lot of different types of investing. Today, we're specifically talking about investing in the US stock market, but also think about investing more broadly. Anything that's going to help you have more assets, more money, more choices in the future is investing. So it could be investing in yourself with more knowledge and education. It could be investing in a business that you have to help scale it. It could be investing in real estate. That's another form of investing that can really help build wealth. The stock market specifically is an incredibly important way because it's really difficult to build wealth without investing in the stock market, given just how much your money can grow compared to if it was in cash or in a savings account. Just nothing can really compete to that. But do keep in mind, real estate and businesses as other ways to be investing, and investing in yourself, of course. So now is an important time. I'm going to go ahead and jump in and share a investment calculator with you guys to show you exactly how wealth grows so quickly in the stock market. And some of you have seen this before. Some of you, it'll be new to you. You can just Google at any time to play around with the numbers, investment calculator, and there'll be different ones that come up. This is one I like in particular. It's one of the first ones that come up. And I have here in the calculator, I'm going to walk you through exactly why it is so important to just get started investment. And the whole theme of today is taking advantage of time in the market, because that is the most powerful tool you have with investing is just time. It's not about how much you put in, it's participating in the market and just getting started now. So here's an example that I go through with people to show, let's see what would happen if you invested a pretty relatively small amount of money every month consistently for the next 7 years. Why 7 years? Well, that's the amount of time that we took to figure out everything with personal finances on our own as an immigrant family. We did start investing during that time, but we didn't have a clear plan. So we really missed out on thousands of dollars, actually tens of thousands of dollars during those 7 years by not just starting in the beginning. So I do this to show people how in just 7 years, how much you can be missing out on by not getting started. We're gonna put a starting amount 0. Let's say you're a new investor, you don't have anything already in account. So we're looking at 7 years, and then the average rate of return we're looking at is 8%. That's because historically, over the past 100 years in the US stock market, the average rate of return has been between 7 to 11%. So 8% is a low end conservative average estimate of that we can assume if we invest in the market over time. It may not be what the rate is in a week or a month or even a year, but over time, if you're doing long term investing to build wealth, to save for retirement, to build generational wealth for your children and descendants, 8% is a reliable number to go with. And then we're going to look at what happens when we put in $200 a month every month. And I just press the calculate button there, and you'll see that the balance that comes up after 7 years is over $22,000. That's how much money you would have by doing a conservative investment in the total stock market for 7 years, an average of 8%, putting in 200 a month regularly. Over 5,000 of that is free money you made just from investing and participating. That's called your investment returns. And so that is money you would have missed out on by not investing. The rest of it is what you were putting in every month with that 200 that adds up, that you may have otherwise just spent if you weren't committed to a clear goal with investing. Now let's look what happens when we change the amount of time we invest and the amount we invest monthly. So just going from merely 7 years to 10 years, if we're able to hold on to the money in the investment account for 10 years, that now goes up to 36,000. That's a huge jump. That shows you right there the difference that just time, 3 more years makes. We went from 22,000 to 36,000. And the amount of free money we're making in interest went up from over 5,000 to over $12,000 with just 3 more years. So the reason this is happening is something called compound interest, because your money invested grows on top, it grows exponentially on top of each other. So the interest that you're making for free, which is like the stock market's paying you to thank you for investing, that money grows on top of itself. So the 8% you're getting on top, the interest itself is growing 8% as well as the money that you're contributing monthly. And then let's look what happens if we just move it to 15 years. Same, still 200 a month, low amount, pretty much to be investing. We're now at 67,000. And then I want to show you what happens if we increase the contributions. Let's say that you have a side hustle going on or an online business, and you're able to now contribute 500 every month to your investment account instead of 200. That goes up to over $168,000, with over 78,000 being money that you made for free, just participating. And then if we can move it up to 1,000 over time, which right now that may seem impossible, but I think you'll see that as you get into it, the momentum builds, and it's kind of like a game, and you start looking for ways to free up dollars from other parts in your budget that you're spending on to invest more, because you see the progress you're making. So if we move it to 1,000, that's now 337,000, over 157,000 free money. So this is crazy, right? But this is just math. This is just how wealth is built in the investment market. And then we can look at what would happen, when it is long term. So it's now been 20 years invested. Now we have over $500,000. A lot of that has been investment returns, over 328,000. And then if we just want to check and see what 30 years would look like, if this is for your retirement plan, for example, you're now a millionaire just by putting, initially 200 a month and then moving up to 1,000 a month. So this is how it works. I next want to show you a compound interest calculator to dive a little bit more into how the compound interest works. So again, let's say we're starting with $0, and then every year, let's say, just to pick a random number, let's say every year we invest a total of $5,000 in our investment account, and then we want it to grow for, I don't know, 10 years with that average rate of return of 8%. We're gonna do that, and it shows us now we have over $78,000 of compound interest, of the interest growing on itself. So it's interest on interest. So this stuff is really cool. I just wanted to show you that to make it really concrete why this whole lesson today is all about time in the market is really what we want to be doing. It's just time. It's not about waiting till you have a ton of money. It's just having time and participating regularly and committing to that. Okay, next I'm going to get into now some of the three big misunderstandings that we see often about investing that keeps people stuck, keeps people held back from not just doing what we just showed you of just doing that monthly contribution and letting the money work for itself. One comes up particularly in the immigrant community for people who are not citizens. So if you are undocumented, if you have DACA, if you've lost your status, if you're in between statuses, some people think that you are not allowed to invest because you're not a US citizen and you don't have a social security number. I'm here to tell you that is not right. That is not true. People can invest regardless of their status. The immigration laws are separate from the laws regarding being able to invest. As long as you have a permanent physical address in the US and something called an individual tax identification number or ITIN number, you can be an investor. And that is something we have helped a lot of people be able to do. Would love to be able to work with you if you're in that situation, because our goal is to make sure as many immigrants as possible are investing, because otherwise we're really missing out on that wealth building opportunity. Like I said, if you were just saving in cash or in a savings account, you would miss out on all those tens of thousands or hundreds of thousands of dollars that the math just does by itself by participating over time. So that's one misunderstanding. The second one is this idea that you need to have a lot of money saved up first in order to invest. I've heard that from some people that they really want to invest, they get why it's important, they're on board, but they have this idea that they have to have money saved to invest to do it first. That's not true either. I showed you guys how just putting, a small amount regularly and committing to that consistently is what is going to help you build wealth. So it can be 200, it can be less, it can be $50 a month, it can be $5 a month. Just doing it consistently and every month is a way for these numbers and this math to get started working. It's about consistency, even with small amounts. So don't think that you have to save up like $10,000 or something like that to be investing. There's just no requirement for that. There are some funds that have in certain types of accounts, like a minimum you first need to have. For example, in some Vanguard accounts, you have to have $3,000 first to open certain index funds. But you can get around that by just starting with something called an ETF, an exchange traded fund. You can also work with other brokerage companies that don't have a requirement like that. So just think about that calculator we went through. You don't need to have a lot of money saved up. You can get started right now just doing $5 a month and letting that rate of return grow through compound interest. The third category of misunderstandings that we often see are limiting beliefs. These can come up in different ways. They are kind of like thoughts that we've heard or society has told us or our families have told us about money in general, about ourselves, about our self-worth, about investing, that can hold us back and can help us, it can lead us to self-sabotage and miss out on that very clear way to be building wealth. So one that comes up and that I totally relate to and understand is not wanting to support capitalism, not wanting to contribute to these very entrenched systems of racism and inequality in the financial system. And that is a really big problem and something to be very thoughtful about. But I don't want that to be a reason for people to just ignore investing and not do it altogether. And there's some reasons for that. First of all, there's something called socially conscious funds where you can invest in certain types of funds that intentionally do not contribute to those forms of destruction that happen in the financial market. So you can choose what you're investing in. Just because you're investing doesn't mean you have to invest in a for-profit prison company or a company that's really bad for the environment, for example. Also, it really doesn't help if your family is behind and you're making this choice. It may seem like a moral value driven choice, but if at the end of the day your family remains stuck and you don't put yourself in a position where you can be building wealth, you're actually hurting yourself and your family because that leaves you in a situation where you will have less options and choices. Building wealth is, it's not just about money, it's about having options and choices in your life and being able to make choices from a more stable place that can be smarter choices. And that is really the ultimate freedom that we're going after, and we've had several clients who've been able to start getting invested and be in a better position to start supporting themselves and their families more, and then be in a place where they can be helping their communities, starting online businesses that are serving their community and making a bigger impact. So all that you may miss out on if you just tell yourself, I can't do this because I don't believe in capitalism. It's also not going away in our lifetime, likely. We likely will not see capitalism go away. We will likely not see racism go away. So I want you all to ask yourselves, why sacrifice your family in the meantime? You can invest and you can also fight those systems. You can protest, you can vote if you have the option to, if you're fortunate, or you can encourage others to vote. You can participate in advocacy. I think one person deciding not to invest is not going to move the needle. The way that change, in my view, is made is through activism, through advocacy, through pushing people in power. And one way also is building wealth and being able to have influence on those systems of power. Whether we like it or not, politics and policies are largely driven by money and who has money and who has a say in where that money is going. Also think about like environmentalism. If you're an environmentalist and you believe in supporting the environment, but you still drive a car, you still use electricity, you're still contributing to harm on the environment. But that doesn't mean you can't find other ways to be helping the environment and lowering your impact. For example, recycling and using less plastic. So it's the same thing with investing. Like we can participate and we can choose what we invest in, or we can decide with our other actions to fight the systems of power that have disenfranchised people over time. Another limiting belief that comes up is thinking that you can't invest because you have debt. This also is something I disagree with, because as we saw with those numbers, you would be missing out on all that time in the market and growth if you wait to invest until you've paid off all your debt. And simply, that's not how wealthy people act. Wealthy people carry debt and they often know how to leverage debt and use it to make more money. But they often are paying off their debt at the same time as they're investing. So think of it as a parallel track. Obviously, if you have a very limited budget and a ton of debt, that needs to be a priority and needs to be very high up in your financial goals. But you could still start investing $5 a month just to start getting that habit going and that mindset that you are not only a debt payer, but you are an investor. And that puts you in a lot more empowered position over time and helps you be in a place where you can start adding to the investments. The more you pay off the debt, the more dollars you'll have freed up over time to then switch over to put into investing and building wealth. Lastly, another limiting belief that can come up is just thinking like, that's not me. I'm not an investor. I'm not that kind of person. No one in my family's invested. None of my friends invest. I've never seen anyone doing that. Like, who am I? Kind of like imposter syndrome thinking. And I just want to say, if that's you, it's not your fault that you weren't taught about investing. That your school didn't taught you. The schools in this country and almost all states do not teach about personal finance, or never mind investing. A lot of people's families have never invested before, and so you might be lacking that guidance. it's not your fault. And it doesn't mean that you can't make a choice to get started now anyway and choose the direction for your family and building your family legacy. Um, I'm seeing some great comments in here. You guys are awesome. Thank you all for joining, for being here. If you have just joined in recently, go ahead and put in hashtag live if you're watching live. If you are part of the Immigrant Finance School community, if you've done the course and we're gonna be doing it, put in hashtag wealth builder. And if you're interested, you can put hashtag, let's see, what do we want to call it? Let's do future investor if you're new, and I'm happy to reach out to you. And I think others in the community will encourage you and welcome you to the community, because it's just about getting started, right? So back to what I was saying. So thinking, you're not an investor, like I said, it's not your fault. We can make a different choice. If you are the first one in your community or family to be doing it, you're going to be the example and the leader for others, and they're going to follow along with you. That's happened to several of our students now at this point, where maybe they didn't have the family support at first to be doing these things like investing, or maybe their families were scared with hearing about people losing money, investing in it being so risky, like gambling, not understanding that there is a long-term kind of conservative wealth building approach that we promote with investing. So I've seen people who go ahead, take the risk and do it, even though they're the first, and then other family members come along with them, and they start seeing their family members open accounts too, and they share what they learn. So think of yourself as a leader, and this is a way to be helping not only yourself, but your family and your community. And if anyone has questions, please feel free to jump in. I'm trying to watch the comments as they come in. Okay, the next section I wanted to get into is how we went from really living to paycheck with $0 invested to now being in a position where we have been investing consistently, and we've been able to build now 6 figures invested in really less than 5 years. And it's all about that compound interest, essentially growing with time and consistently investing every month. So a little bit about our story. My husband Mauricio and I, we started this whole journey when he came to the U.S. From Ecuador in 2013. And when he came, I was a student. He was an unpaid intern. We really didn't have a lot of money. He didn't have health insurance. The side job that we were able to do, we were severely underpaid. When I finished school, I was still severely underpaid. And we were constantly anxious about money and the bills. It was just like a constant source of energy. I don't think I even really fully realized at the time how much stress it gave me, but it was something I was always worrying about. We would always fight about, would always limit what we could do on a daily basis. And we certainly were not investing, right? And so we began our personal finance journey trying to figure this all out, teaching ourselves. I always talk about how there was nothing we could find on the internet about personal finance and for immigrants specifically. So we spent a lot of time researching all this, reading all the books and the podcasts, and we started blogging at immigrantfinance.com about personal finance for immigrants. We began investing little. Once we learned about it, we gave it a try, and we didn't know what we were doing, but we just put one foot in front of another, learning, taking the baby steps, learning, and we started investing small amounts monthly and just committing to that. And there were some months that we couldn't invest, or that we could put very little in, but we tried to always make that a goal. And eventually, pretty quickly, I would say within less than a year, we started to see the momentum building, because our investment, the compound interest, started kicking in. And all of a sudden, we had like hundreds of dollars that we had made just from putting in these small amounts every month. So when that momentum starts, you start to get the motivation because you see it's working, and it just incentivizes you to keep investing more, to find extra dollars, to increase your income so you can invest more, to plan more around your money and budget so that you're able to really commit to that. And eventually, not too long ago, just in the past few years, we were able to max out our Roth IRAs for the first time. Actually, this was the first year for Mauricio to do so. I think my first year was a couple years ago. And there's limit how much you can do that every month and of 6,000. And it was, for so long, like a dream to even try to reach that, and I didn't think it was possible. But again, the momentum kept building. The numbers don't lie, right? The compound interest just keeps building. And so that's been why we've been able to save up a lot and to be able to eventually own a home. That it was very helpful for saving up for a down payment, because if it was just in a savings account, our money wouldn't have grown. And so it would have been like every dollar we would have to save for the down payment. Versus investing, again, it just keeps growing on top of each other. So how we were able to do this, I wanted to dive a little deeper in case it's helpful for people. The main thing is goal setting. It's very hard to make progress if you're not clear about what your goals are. And if you have too many goals, none of them ever happen. So just getting really crystal clear about what your investing goal is, how much you want to do, like how often, and finding a way to commit to it and just being laser focused on that. It's really scary at first, but when you get closer to meeting that goal or to, aspiring toward it, even if it still feels unrealistic, you start to realize that you can actually keep raising the goal higher. And it becomes like a game with yourself, So sometimes the goal setting can actually happen really fast. When you get that clarity, you might be surprised that once you really commit to a goal, it might happen a lot quicker than you thought. And so part of getting there is just stop making the excuses, taking personal responsibility for the excuses of not going to the goal, being very thoughtful about, what things are coming up, what insecurities are coming up that are holding you back from meeting it, and diving deep into those to get to the source of the problem and really change the story for yourself. Most people are not focused enough to do that. So it's really about being certain about putting your attention focus on your goal. It's also about having a strategy of how you're going to free up that money to be investing, and what you're going to be doing with it once you get it. And getting used to being uncomfortable, right? Because this is really scary outside of your comfort zone. We don't really grow unless we're outside of our comfort zone. So getting in a place where financially you are doing that toward a goal is going to help push you to make it actually happen instead of just staying where you're comfortable, where nothing changes. And lastly, sticking to the plan. So having discipline with investing. The market's going to go up and down and up and down, especially when there's big political events happening or big events in the economy. And it can be terrifying. You could have one day where you've lost thousands of dollars. But you just have to stick to the plan and trust, that over time, even though things go up and down, they go up and down like this. I might be going the reverse in the screen, but they go up, they go overall like up, even though if it's a little bumpy. And so don't sell off all your investments if the money goes down. You are going to hear people on the NBC and the C-SPAN, all those financial news and stuff, like freaking out and talking about selling off things. And you're going to see other people selling off things, even very rich people, even very smart people. And just what you want to do is stick to the plan, try to stay unemotional, reach out to this group if you're feeling tempted and ask for support. And don't sell off things, because the economy will go back up. We saw this in March when there was a huge crash in the economy during like the height of the first wave of COVID, and it went back up. Now it's actually higher than it was before. So stick to the plan, be disciplined, keep doing the same thing. You don't need to change up your strategy, just every month consistently investing. Reach out to others who are investing so you have that support to stick with it. Find masterminds, find coaches, find groups who can support you. This group is a great place to do it. If you're looking for more support, we have our Immigrant Finance School community and coaching program too, where we help you learn about investing. So just whatever works for you, maybe finding friends who are investing just to get that support so you don't freak out when there's changes in the economy. And we go deeper into all of this in Immigrant Finance School. We help you make sure that your account is open and that you have a plan going forward for how to be investing with a lot of clarity about how to do that. We don't have too much more time to get into all the details of that today, but if you're interested, put hashtag future investor and we can reach out to you. You can also send us a DM. Okay, and now here I'm going to talk about 3 things that you can apply to be investing and preparing for the investing in the stock market if you are a new investor or you just started investing. So one of them is learning how to budget. Budgeting is the foundation of personal finance. It doesn't make sense to just be investing if you don't know how to budget well, because that is the tool of how you get dollars in order to invest and how you have clarity about what your investment goals are and make a financial plan around that. So budgeting lets you be very intentional about where every dollar is going. Something else you can start doing is just familiarizing yourself with investing and start paying attention to the markets. You can look up on Yahoo Finance and track how the markets are performing, how they respond to different news events. If you have an Apple iPhone, there's an app called Stocks, and you can save some of the broad funds tracking the market, like the S&P 500, the Dow Jones, and look at how it's just changing. And you start to see the patterns. You start to see, oh, there's like an election coming up, or oh, COVID's getting really bad, like the market starts to go down. Oh, there's a vaccine coming up, the market starts to go up. So you can see those changes and get more comfortable with it, and so that you're used to the volatility of it going up and down and don't freak out once you have money at stake. You can also start just looking up every time you hear a new word in investing. So if you hear a term like capital gains or dividends, these things that may be new to you, just look it up. And that's how you can teach yourself over time and become, put yourself in a position where you are empowering yourself to learn how to invest. And it's really just getting in that habit. And over time, the concepts start to make sense. People try to make investing sound really, really complicated. And so that you have to pay a financial advisor to handle your investments, pay them all this money every year, or pay other experts. But it's actually it can be pretty simple, especially doing this kind of long-term investing plan of just really focus on time in the market as a whole. You don't need to pay a financial advisor to do that for you. You can learn this on your own. And that's something we would love to help you with if you're looking for support on that. Also, increasing income so that you can have more money to invest. That's very important. We can only do so much with the budgets we have if the total number in the budget is not rising. So make sure to find ways to start making extra money, whether it's like side hustles, babysitting, food delivery, selling things on Etsy, or extending more into like freelancing online, providing freelancing services, or starting an online business. And that's something we also focus on a lot in Immigrant Finance School, because increasing income is absolutely critical for wealth building and being able to invest more money. Finally, I would also recommend starting to work on your mindset, especially if you're having some of those imposter syndrome thoughts come up, or feeling like, this isn't for you. Maybe that who am I to be investing? I want you to start thinking of yourself as an investor. Think of yourself as someone who is going to be owning part of the US economy and be an owner in the economy and owning these businesses that run the best economy in the world. And if you already have started investing a little bit, think of that now. You own part of the market. You're a big deal, right? And so this mindset stuff can really shift the game from being like scared and I don't know anything, and being in like a passive position to being more confident. Even if when you don't know something or new information comes up or something intimidating, instead of retreating, just having the confidence to look it up and learn about it, or ask other people in this group, ask other people in your community, just changing that mindset so that you can have that confidence to keep committing to the plan and get to a place where you start seeing the momentum. The hardest part is just getting started. And then once you get started, waiting for that momentum to start kicking in where you can see the benefits of what you're doing. And then it will all get easier from there. As the numbers start climbing, you're going to just want to invest more and more. So that is most of the presentation for today. I was just going to wrap up by inviting you all, for those who may be watching this and are new to the community. We will have another round of Immigrant Finance School starting January 17th. We have a bonus going on right now for Black Friday for anyone who signs up before November 27th. We will be offering a free coaching session to help you plan your 2021 financial goals. So we'd love to work with you. For those of you already in the community, thank you again for being here. I'm going to take a look and see if there's any questions, but otherwise we'll wrap up. Feel free to add questions though while I'm looking. And I appreciate you guys all being here. I hope everyone's having a good weekend. Let's see. Okay, I'm not seeing any questions yet, but it's hard to see them all on the other screen. All right, well, thank you guys so much. Happy Thanksgiving. We'll be having these trainings, live free trainings every month. So keep your eyes out for the next one. And if there's any topics in particular you want to hear about, just let me know. Thanks, take care, bye.